Here's an interesting topic. Should you go for an HDB loan or go for a bank loan if you're eligible for both? This is a topic that I stumbled across with my client while we were doing our discussion for his next property purchase. So while we were doing our research, we realized that most people today, they are on their second HDB loan, and when they want to upgrade or downgrade for their next flat, they are ineligible for an HDB loan. They have to go for a bank loan. And for most people, they're not so keen on doing that for today. Let's take a step back. Why are most people on their second loan? Back then, 5, 10, 15 years ago, bank interest rates were in the range of 3, 4, 5, 6%, whereas HDB loans were still in the range of 2.5. HDB loans has always been 0.1% higher than your CPF interest rates. For discussion purposes, we researched, and if you were to take a bank loan, there's a minimum amount of $100,000 that you have to borrow. And for most clients, like himself, he only needed a $40,000 loan. And to do so, HDB can grant you anything below $100,000. Whereas if you go for a bank loan, you would have to take a minimum of $100,000, like it or not. If you take an HDB loan, there is zero lock-in period. You borrow today, tomorrow you get a windfall, you strike the lottery, you can fully pay, you can redeem your loan, your HDB loan. Whereas if you take a bank loan, if you redeem it within your lock-in period of 1, 2, 3 years, depending on your package, there would be a penalty. The penalty usually ranges from $1,000 to $3,000 depending on your package again. I wish for most of my clients, they can go for their third, fourth, fifth HDB loan, but unfortunately, Singaporeans are only entitled to 2 HDB loans. So knowing that as a fact, you should keep these two, as much as possible, these two chances in your pockets. Save it in for the future, especially if you know you might be upgrading or you might be downgrading and needing another HDB loan. Because only today, it makes sense for you to go for a bank loan. Only in the last 2 to 3 years that bank rates has stayed comfortably below HDB interest rates. As I've mentioned, bank rates today are between 1.8 to 2%. Even those fixed rates, fixed 5 years rates, are in the range of 2% plus minus in that range. Whereas HDB loans are in the 2.6% rate. Why is HDB loan much higher than the bank rates today? Simply because HDB loan is pegged to our CPF savings interest. To recap, what I'm saying is an HDB loan is one of the best things that can happen to us. So all the more you should save your chances of using an HDB loan for the future.